Let's get one thing straight. You work hard for your money, so why would you let a financial institution take more of it than it deserves? Deciding where to park your cash is one of the first, most important financial decisions you will ever make. It is not just about having a debit card and a place to deposit your paycheck. It is about setting yourself up for financial success. Many people just walk into the bank on the corner without a second thought, but that convenience could be costing you a lot of money over time. You must be smart about this. You must be in control. The choice often comes down to two main options: a traditional bank or a credit union. On the surface, they look almost identical. Checking accounts, savings accounts, car loans, mortgages. Both give you a place to keep your money safe from being lost or stolen. However, underneath that similar exterior, they operate on fundamentally different principles. One is a for-profit business, designed to make money for its owners. The other is a not-for-profit cooperative, designed to serve its members. Do you want to be a customer, or do you want to be an owner? Answering that one question can change your entire financial future. It can be the difference between paying higher fees and earning lower interest rates, or keeping more of your hard-earned money in your own pocket. Think about it. Every dollar you pay in unnecessary fees is a dollar you cannot use to pay down debt, save for a down payment, or invest for your retirement. This isn't a small detail, it's the foundation of building wealth, so you need to stop, take a breath, and really understand the pros and cons of each before you commit. This guide is here to empower you with the knowledge you need to make an informed choice. We are going to break down the key differences between banks and credit unions in plain English. No confusing jargon, no complicated charts, just the straight-up facts you need to decide which institution aligns with your personal financial goals. By the end, you'll be able to look at your financial situation and confidently choose the path that is right for you, your money, and your future. It's your money, and you deserve to have it work for you, not against you. First, let's talk about banks. A bank is a for-profit financial institution. This is the most important thing you need to remember. Banks are businesses, plain and simple. They are owned by investors and shareholders who expect returns. To make that profit, banks charge you fees. They also profit from the spread, low interest on savings, and much higher interest on loans. National banks like Chase, Bank of America, Wells Fargo, with thousands of branches and ATMs nationwide, their goal is to maximize profit. But that focus affects you. Higher monthly maintenance fees if you don't meet minimum balances. Extra charges for using out-of-network ATMs. Savings interest that's almost nothing. High rates on car loans. High rates on credit cards. This is how they make money for shareholders. Now let's look at credit unions. A credit union is a not-for-profit financial cooperative. It means members who deposit money are also owners. There are no outside shareholders to pay. When you join, you become a member owner. They're not chasing investor profits, so their mission is different. Surplus earnings are returned to members as better products. People helping people is the core philosophy. When you compare banks and credit unions, the differences in fees and interest rates become glaringly obvious. This is where your choice directly impacts your wallet. Banks, with their profit-driven structure, often have a longer list of potential fees. You might face a $10 to $15 monthly service fee on a checking account, or strict requirements like maintaining a $1,500 minimum daily balance, or setting up a direct deposit to avoid that fee. Overdraft fees at big banks can be steep, often around $35 per transaction. These little charges add up and can drain hundreds from your account each year. Credit unions, on the other hand, are famous for fewer and lower fees. Many offer truly free checking, no monthly maintenance fees, and no minimum balance requirements. Their non-profit status lets them be more forgiving on fees. They still charge overdrafts, but often lower than big banks. Because they prioritize member service, they help you keep more of your money. A slightly lower rate on a 5-year car loan could save you hundreds or thousands. Technology and accessibility are another big comparison. Big banks have historically held an advantage. They've invested billions in sophisticated mobile banking apps, extensive nationwide ATM networks. Section 4. Making the right choice for your life. So, who should choose a bank? A big national bank is often the right choice for a specific type of person. If you are a frequent traveler who needs reliable access to branches and ATMs in different states or even different countries, the vast network of a major bank is hard to beat. If you are a small business owner who needs complex services like merchant accounts, payroll processing, large business loans, a commercial bank is structured to meet those specific needs. They have departments dedicated to business banking that most credit unions simply do not have. Furthermore, if you are someone who values cutting-edge technology above all else, a large bank is likely your best bet. They are constantly rolling out new app features, from advanced budgeting tools integrated into your account, AI-powered financial assistance. If you want the absolute latest and greatest in digital banking, and are willing to potentially pay a little more in fees for that convenience, then a bank will serve you well. You are paying for a premium service that offers maximum accessibility and a wide array of sophisticated financial products, all under one roof. On the flip side, a credit union is the ideal choice for people who prioritize value and personal relationships. If your primary goal is to minimize fees and get the best possible interest rates on your loans and savings, a credit union should be at the top of your list. For example, if you are planning to buy a car, financing it through a credit union will almost always get you a lower rate than a bank, saving you significant money over time. The same holds true for personal loans and mortgages. A credit union is also perfect for someone who appreciates a more personal, community-focused banking experience. At a local credit union, the tellers are more likely to remember your name. When you apply for a loan, you are more than just a credit score. The loan officer may take the time to understand your personal situation. If you want to feel like a valued member of a community, rather than just another account number in a massive corporate system, the culture of a credit union will be a much better fit for you and your financial journey. Section 5. Your final decision and a simple tip. In the end, there is no single right answer that applies to everyone. The choice between a bank and a credit union is deeply personal. It depends entirely on what you value most in a financial institution. A bank is a business that sells financial products. It excels at providing widespread convenience, advanced technology, a massive array of services. A credit union is a financial cooperative owned by its members. It excels at providing superior value through lower fees, better interest rates, personalized customer service. You are not choosing between a good option and a bad option. You are choosing the option that best fits your life. To make your decision, be honest with yourself about your priorities. Make a simple list. Does having 24/7 phone support matter to you? A branch in every major city. Would you rather save a few $100s a year in fees, even if it means using an app that is slightly less flashy? Look at the numbers, compare the fee schedules, compare the interest rates for the savings products and the loan products you plan to use at a local bank and at a local credit union. The math will often make the decision for you. Your money is your power. Where you keep it is a vote for the kind of system you want to support. Do you want to support a for-profit corporation or a not-for-profit cooperative? Both are valid, but they lead down different paths. Choose the path that gets you to your financial goals faster and with fewer obstacles. Do not let inertia decide for you. Take control. Do your homework. Here is a final, simple tip to guide you. You do not have to choose just one. There is no rule saying you can only have one financial institution. Many savvy people use a hybrid approach. They might use a large national bank for their primary checking account because of its convenient ATM network and a slick mobile app for daily transactions. At the same time, they might join a local credit union to house their emergency fund in a high-yield savings account and to get the absolute best rates on their auto loans and mortgage. This strategy lets you get the best of both worlds. Oh well, that is that. Thanks for joining us, and don't forget to subscribe and watch the next video.